Welcome back to the Denver Radio Real Estate Show. I'm Cheryl Garlock with Colorado Front Range Properties. So glad you guys could join us today. We cannot have your house falling apart, can we?
No way.
No way. Okay. Hey, listen, I want to go ahead and mention to you guys, if you are thinking, about selling your home at all, putting it on the market, you want to get an idea as to what it might be worth, go to denverrealty.com, and if you scroll right below the panoramic image, you'll see a little market snapshot with a little image with the pink piggy bank in the house. So it's a really cool thing there. It's an instant report, you might say. Well, pretty instant, like within about 20 minutes, something like that. It compiles all this data that you put in and cross-searches other solds that are really pertinent to what your property is and gives you an estimated analysis. You'll need to call me to get some better explanations, but it gives you great insight to the market and for your area there. And that's great if you're selling a home. Also, if you're buying a home, you're trying to check out market trends. That's really a great tool. It's called Market Snapshot. Go to denverrealty.com, scroll right below the panoramic image there, and you'll see the little pink piggy bank there.
What a great tool.
It is a great tool. It's a great tool. I love that website.
Especially in this hot market, you gotta have a good idea of what you're trying to sell or trying to buy.
Yeah, you need to, and you need to know your neighborhoods. You need to know your neighborhoods. You need to track the values in those neighborhoods. So that's really a big deal. So Chris Zadro, Chris Z. We renamed him.
Chris Z.
We call him Chris Z. Anyway, listen, let me tell you here with Homebridge Financial Services, and we are going to go ahead and talk a little bit about mortgages here as far as what people need to know.
Yep.
Because right now is a really great time to be a buyer in today's market. What's the 30-year fixed rate going right now?
They're bouncing anywhere from that on a conventional 4 1/4 to 4 3/4. The market's kind of been hovering in that 4.5 range, for a little while.
And the government rate, what's the government rate?
Those are definitely down much more into that low 4 range.
Like 4s?
4 1/4, again,
Right.
depending on the market. The market's a little cranky right now just because some of the economic numbers are, coming in slightly better than what, they were hoping for, which is good for the economy, not good for rates. So,
yeah, right.
But,
doesn't that sound weird? Good for the economy, not good for the rates.
Yep,
Huh?
bond market typically goes opposite of the economy. I mean, that's why we've had such fantastic rates over the last several years is, obviously we've been kind of going through this recession, I guess.
That's right.
They call it.
Now, let me just tell you guys something. I'm going to tell you right now, that is not going to last. We've been saying this for a long time.
Yep.
And I know that we've had these seductively low interest rates for a long time, and that's really what I call them, seduction, basically. Okay? They will not last, okay? And you need to go ahead and take advantage of these rates while you can, because you know what happens, Chris? When people call me, they're always going to say to me, well, okay, I want a house and I only want to pay $1,200 a month.
Yep.
I want to pay $1,500. I want to pay $1,800. Okay, well, if you wait,
It's not going to be that much more.
well, and they don't realize that same house, same size, same square footage, same price, with the interest rate adjusted, say a point difference, depending on what you're talking about, could be a $200 difference,
Yep.
could be a $500 difference in your payment.
Yep, it definitely makes a big difference. And, I always tell people, too, because there's always people that say, I want to catch the bottom of the market and all that kind of stuff. And, you can't catch the bottom of the market. I mean, it's just like, when you're dealing, going after the stock market or whatever. You don't know you're in the bottom until you're past it. But, we're still in a perfect time frame. I mean, prices are still reasonable for where we're at.
Mm-hmm.
Rates are fantastic, even though they're not necessarily at the bottom. And so you can buy $10,000 to $15,000 more house.
I've been in this industry for 30-some years here, and it's about as bottom of a market rate. I mean, I don't think most of our grandparents got rates at 4%.
Yeah, definitely. I mean, 4% was something that you got on an arm, and it would change the day after. So.
Absolutely. Earlier at the top of the show, I was talking about contingencies.
Right.
Dealing with contingencies and buying and selling property there.
Yep.
And one of the things that I think as a listing agent, when you're representing a seller on a property, you've got to make absolutely certain here, that when you're taking that property off the market here and going to basically accept a contract from
Right.
somebody, that buyer is thoroughly qualified to do so.
Correct.
Because you could waste a lot of valuable marketing, 30, 45, 60 days.
Yeah, and sure, we're in that time of year where, obviously because of Colorado's weather, I mean, we typically see our market anywhere from, our market gets hot anywhere from February, March, April, somewhere in that window, all the way typically until, about September when the kids go back to school, and then it kind of picks up just a little bit, and kind of slows down in the wintertime. And so we're in the hot market right now. I mean,
Right.
July is, one of the busier, probably one of the busiest months that we deal with. And so, like what you were talking about before, our market's hot. And so, when you go into, we've been talking about over the last few shows about getting pre-qualified, and getting yourself in a position where, you know, you're ready to go when you go find that house. Just like you said, if I'm a seller or I'm a selling agent, I want to know, because again, there's only so many days in the summertime that it's hot. And I want every single buyer I can to come in and potentially, you know, take this house and buy it from us. And so, you know, having a situation where having a contingency, like the sale of your home as an example, one is bad enough. But then if you come in and, you know, basically have two, meaning I've got to
It's a
sell my
big
home.
domino theory.
Yeah, I've got to sell my home and I haven't talked to a lender yet. You know, the seller, you know, those are not necessarily marks on the correct side of the chart. You know, they're negatives against you. And so if somebody else comes in with an equal offer with one less contingency or no contingencies, all of a sudden now you're in a completely different negotiation process.
Right, and you know, you definitely have to have your ducks in a row
Yep.
here, and you cannot just go ahead and start saying that, oh, I talked to the bank, yeah, I can qualify. Yeah, well,
Right.
I want to see it in writing.
Yep.
Where is your pre-qual letter, better yet, your pre-approved
Pre-approval letter.
Tell them what
Yep.
the difference is between pre-qual and pre-approved.
You know, pre-qual basically means, you know, we play the 20 question game. You know, I talk to you on the phone, I ask you all the crazy questions, you know, whatever you tell me I use, and then, you know, basically, does it work, does it not work? That would be a pre-qual.
Yeah.
Pre-approval, and there's different variations to this, but pre-approval means that I've collected your documentation, I've verified that you do make X, you know, whatever per hour or salary or commissions or whatever.
You have a real bank account.
Yeah, you have a real bank account with no funny money in it, if you will. You know, and basically, you know, we've kind of verified that. The really tricky ones we actually send into an underwriter and even take a look at them beforehand.
Right.
You know, so, but that we want to get to that pre-approved process. You know, even one of the things we're going to talk about here in a few minutes is we're going to talk about investment properties. That's even more critical when you start looking at that, because again, you got to remember, investment properties are still part of the hot market. Okay, there's not nearly as many as what they used to be, and they're not necessarily at the bottom end of the range like they used to be. But you know, when you go in and you're buying either a primary home or you're buying an investment property, you've got to make sure, because the investment rules are so much different.
Oh, they are tremendously different.
Credit's a bigger deal. How much you put down is a major deal. So there's all kinds of different things that, you know, when you start looking at buying an investment, and when we get in a position where, you know, Tracy's going to be talking about a 1031 exchange, you know, we want to make sure that people are doing what they need to do up front so that they don't get themselves in trouble, because there's some major rules around the 1031 exchange
Oh,
that
there
can get
are.
you in trouble.
You guys, I've got to tell you, Chris Z is so right about that. There are some major rules about that. And if you miss your step, sorry, Charlie, you cannot go back. And as Tracy is going to definitely share with us here. Hey, we've got a lot more to tell you on the Denver Radio Real Estate. So, hey, the number to call us at is 720-373-0654, 720-373-0654.